Cardano, ADA. We've been watching it, and folks, there are some seriously bullish signals flashing right now. We're talking massive volume surges, key technical breakouts, and indicators lining up for a potential major move. Is the bull run back for ADA? Is $1.17 really on the card soon? Stick around, because on Zacchy Crypto Update, we are breaking down exactly why these metrics matter and what could happen next for Cardano's price. Alright team, no fluff, let's get straight to the data that's making noise. First up, volume. CoinGecko data is showing Cardano's daily trading volume in the spot market surging, hitting over $700 million today. But it's not just today. This continues a trend where daily volume has consistently been above $700 million on weekdays since late April. We even saw a spike to over $1 billion back on April 25th. Why is this significant? Think about it. Rising volume, especially when the price is also showing strength, ADA is up nearly 40% from its April low, is a clear sign of increased demand. This isn't just retail interest. Sustained high volume often indicates larger players, potentially institutions, are accumulating positions. When a crypto is rallying, volume confirms the strength of that move. If it were crashing, high volume would confirm selling pressure, but here, it's backing up the price increase. Now, let's look at the futures market, specifically open interest. Per CoinGlass, ADA's open interest in the futures market has climbed to $782 million today. While maybe slightly off a recent peak, this is substantially higher than the April low of $576 million. Open interest measures the total number of outstanding futures contracts. When it rises alongside price, it suggests new money is coming into the market, betting on higher prices. My thinking here is simple. More volume and more open interest equals growing conviction among both spot and futures traders that ADA has upside potential. Let's layer on another crucial piece of data, the funding rate. The funding rate in perpetual futures contracts keeps the futures price close to the spot price. When the rate is positive, it means those holding long positions, betting on price going up, are paying a small fee to those holding short positions. Cardano's funding rate has turned positive, recently jumping to around 0.65%. A positive funding rate like this is a strong indicator of bullish sentiment among traders. It shows that longs are confident enough to pay a premium to maintain their positions, overpowering the shorts. This isn't just a small detail. It's another piece of the puzzle confirming that the market sentiment, at least in the derivatives world, is leaning heavily bullish for ADA right now. My opinion, when volume, open interest, and funding rates are all aligning positively like this, it creates a powerful force potentially pushing the price higher. Beyond the on-chain and market data, the technical charts for Cardano are screaming bullish too. Let's look at the daily chart. First, you can clearly see this textbook inverse head and shoulders pattern forming. Left shoulder head, the April low around 52 cents, right shoulder. This is a classic bullish reversal pattern, and completing this pattern typically targets a move upwards equal to the height from the head to the neckline. Second, and perhaps even more compelling, is this large falling wedge pattern. A falling wedge is formed by two downward-sloping converging trendlines, connecting lower highs and lower lows. It often signals that downward momentum is exhausting and a bullish breakout is likely. The crucial part, Cardano has now moved above the upper trend line of this falling wedge, and even better, it has performed a retest of that broken trend line, and it held as support. This break and retest confirmation is a very strong bullish signal in technical analysis. Third, we also had a double bottom pattern form right at that April low around 52 cents. The neckline for this pattern is up at $1.17. So, combining these patterns, the inverse head and shoulders building the confirmed falling wedge breakout and retest, and the double bottom targeting $1.17, the technical picture looks incredibly strong. Based on this analysis, the most likely ADA price forecast is a surge towards that $1.17 resistance level, which is a potential move of about 67% from the current price of 70 cents. My thinking here is that multiple bullish patterns confirming each other significantly increases the probability of the projected move. So, to synthesize, we have rising spot and futures volume indicating strong demand, positive funding rates confirming bullish sentiment among derivatives traders, and powerful bullish technical patterns like the confirmed falling wedge breakout and the inverse head and shoulders/double bottom forming. All signs are pointing towards a significant potential move higher for Cardano. The confluence of these factors makes a run towards $1.17 look very probable based on this analysis. Nothing in this video is or should be considered financial advice. I am not a financial advisor. This is my analysis, my opinion, based on publicly available data and technical indicators, shared purely for educational and entertainment purposes. The crypto market is incredibly risky and volatile. You can lose your entire investment. Always do your own thorough research, DYOR, and consult with a qualified financial professional before making any investment decisions. Alright team, that's the deep dive into Cardano's potential bull run for today. The signals are looking strong, but remember to stay disciplined. If you found this analysis helpful and straight to the point, please give the video a like and make sure you're subscribed for the next update. I'll be back soon with more crypto insights. Until then, stay focused, stay safe, and I'll see you in the next video or the Telegram group.